Good morning, ladies and gentlemen, and welcome to the ECSC Group PLC Final Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I would like to submit the following poll, and if you would give that your kind attention, I'm sure the company will be most grateful. And I'll now like to hand you over to CEO Ian Mann. Good morning to you, sir.
Morning, Jake.
Morning, sir.
Good morning, everybody, and thank you for attending. So, as Jake says, this is our full year results to the end of December last year. I'm joined today by Lucy on my right and Gemma on my left. So Lucy's Chief Operating Officer. Lucy's been with the company over 20 years and was part of the founding team. Gemma joined us 14 years ago and became CFO in 2020.
Yes.
I'm looking at you to get the answer to that, but it's actually written there. So yes, in 2020. We'll be going through the slides. We do have some pre-submitted questions, which I think we're answering some of them as we go along, but very happy for you to ask questions. We try and answer as much as we're able to as we go through. So looking at the headline results, overall revenue is up 8%. So we've grown consistently every year since our inception, with one exception, which was in 2020 with COVID, where we saw a 4% decline. The impact of COVID for us was relatively short term, in that we had a 3-month window where a lot of cybersecurity projects got delayed because people were implementing remote working, and then things have recovered in different ways depending whether you're talking about assurance division or the managed services MDR division, but we'll go into that in a little bit more detail as we go through. MDR recurring revenue growth of 7%, and the assurance division itself has grown 15%. So that's recovered really quite strongly from COVID. The managed services, that's been a slower recovery, and it's really the sales pipeline that suffered through COVID, with people not making those big decisions and tending to delay those sorts of decisions. But we're seeing that recovering now as well. Adjusted EBITDA. It looks there as if adjusted EBITDA is down. You have to go to the bottom of the screen to see that the 2020 figure actually included £300,000 of government grants related to COVID, mainly in the UK, but also in Australia. For those who are familiar with us, we have an operations centre in Australia. No clients in Australia, but it allows us to do 24/7 cybersecurity monitoring. So the 2020 figure included £300,000 of government grants that weren't included in 2021. So adjusted EBITDA has actually grown from where it was in 2020. Cash has remained similar to the end of the year than the start of the year. The end of the year includes a loan we took out in December, but we also made payments of over £400,000 paying off government COVID loans. There's very little at the end of December. There was about £20,000 left within that loan there. So we paid off the government loans, but took out a business loan towards the end of the year. Continue to invest in research and development. That's grown 1% up to 15% of revenue last year. And the partner programme. There has been a question, can you provide more detail on the partner programme and the strategy for developing it? We've got a slide on that later, so we'll go through that. But that's now contributing 11% of revenue, roughly the same in assurance and MDR, but 11% overall, and it was 4% in 2020. And we're quite impressed with that, given that we only launched that in 2019, so it's really now coming more to maturity. So that's the financial highlights, and this graph illustrates the progress we've made since IPO. You'll notice the slim line of black at the top. That's actually client expenses. So our revenue's been depressed slightly, a few percent, because most of the work we're doing is still remote. So even though a lot of people have come back to work, our client base tend to be dealing with technical IT people, and most of those are still remaining working from home. So our face-to-face work is what percentage of our consulting?
It's only about 10% at the moment.
Okay, so it was previously pre-COVID, what, 80% on site?
Yeah.
So you see a big reversal there. So that's what that other category is. You will see that we've made significant progress in the last 5 years of growing the MDR division. So pre-flotation, that was about a quarter of the business. Now it's closer to 50% of the business. So that was the post-IPO strategy, because we used IPO precede the IPO proceeds to invest in the 2 security operations centres, one in the UK and one in Australia, and that was the strategy, to use this to grow the managed services side of the business. In terms of our wider services, I'll hand over to Lucy to give you a brief summary of the sorts of things we do, and then I've got some little mini case studies of particular things we've done for certain clients to go through with you as well, to better understand what we do.
Yeah, okay, so this slide outlines our services. So they're split between MDR, which is monitoring, detection and response services, and those are delivered from the SOC, the Security Operations Centre, as Ian mentioned. And that's monitoring our clients' networks 24 hours a day to look for potential breaches and potential incidents that they might have had. Also run from that division is our incident response. And that is responding very quickly, again, 24 hours a day, to clients that suspect they might have had a breach. The other side of the business is the assurance consultancy, and that's a mix of frameworks and certifications and standards that we help our clients to achieve. So, for example, we've got PCI DSS, which is the payment card industry. So that's any of our clients that take or process or store credit cards. That's a set of rules that they need to follow to keep that information secure. We have 27001, which is an internationally recognised standard for any organisation, and that's related to information security specifically. We have technical penetration testing. So this is where we provide ethical hacking, and we simulate a hacker attack on our clients' networks and websites, and then help them fix those vulnerabilities before the hackers exploit them. And then we've got Cyber Essentials, which is more aimed at the SME market. It's a benchmark and set of controls that they can implement to improve their security. The MDR service is contracted, so that's typically 2 to 3 year contracts, and you'll see that in the recurring revenue in the KPIs. The assurance side is more of a continual sell. So our clients are not contracted to use us year on year. But you'll see from the KPIs that the thing that we measure there is repeat business. So in 2021, 81% of our clients that bought in the previous 2 years also bought again last year. So that just is an indicator of the quality of the service and of our client satisfaction. Move on.
Okay.
This just shows one of the Security Operations Centres. This one's in Bradford. As Ian mentioned, we have one in Australia as well. And again, this is providing the 24-hour response and monitoring of client systems. If you want to say more about it.
Yeah, the Australian, I know, thanks to David for asking. David said, seeing that you have a base in Australia, wouldn't it make sense to recruit clients there? Yes, it would. And we do intend to develop in Australia, but that's not this calendar year. But that is on our roadmap because we've got that established base there. Australia for us is important because you've got a choice really in cybersecurity monitoring. You have to do it 24/7 because the hackers are coming from all around the world, and also if there was any trends, it tends to be more attacks out of business hours, weekends, bank holidays, etc. So you do see spikes in activity, and the hackers know that those are the times when companies may have less people watching and noticing things happening. So it's really essential that you do 24/7. And you've really got two choices. If you're a smaller company, you can establish 24/7 working and have people working nights, that's not very well received by the engineers and their families, and you'll tend to find recruiting and retaining people more difficult, and that's a key thing for us to recruit and retain the best people. So 24/7 doing it properly requires you to have something in another time zone. Australia is almost perfect in that it's 10 or 11 hours depending on the time of the year, so it's good for time zone, but we chose it as a premium location because it allows us to operate in a regulatory regime that's closely aligned to the UK, so it satisfies all our clients' concerns over things like GDPR, but also we can get high quality recruits from local universities, and we restrict employment to Australian and New Zealand nationals only, which you're allowed to do under law in Australia. So it allows us to have a premium service, but also cost effective given that at the size of our operation. So it fits both of those things. The next slide illustrates some of the monitoring we do and put some numbers on it. So you could regard that the number one benefit of the monitoring is that if your network gets hacked and your IT systems get hacked, there's a period of time of the hackers doing things to prepare the ground for deploying ransomware. And I pick ransomware because that's the primary thing that affects most businesses, in that it cripples their operations. And if they can't recover systems, they have to pay ransoms, which can be into the millions of pounds now to get their data back. And you'll see organisations in the press. Of course, most you never hear about, but the ones that the larger brand names, you'll see that their operations can be disrupted for many weeks or months even. So you have a window of opportunity which can vary considerably, but on average you've got 2 to 3 weeks from an initial breach to ransomware being deployed. And in that time, hackers are doing various activities. And I won't go into that, but it's the detection of that hacking activity pre-ransomware where you offer the most benefits. So you've got usually a couple of weeks chance to spot things unusual happening and identify that as a hacker. Then you can block them and stop it and stop it becoming ransomware. So here's an example in numbers, and it illustrates the use of our artificial intelligence. So here, in a single month, the client's IT devices, and this client had 1,276 devices sending us information. So they're sending us activity logs of what they do. So for example, you get into work in the morning, you log into your computer, there would be a log generated to say that you, user X, has logged in at that time. Now, that might not be very interesting, but let's say you fail to log in, you use the wrong password, that would generate a different log. And let's say that a system has had multiple attempts of people to try and log in and all the passwords keep failing, then that could be more interesting. So certain activities more interesting than others. So those 1,276 devices in a single month generate 3 billion logs. So you can start to see immediately that you can't look at all 3 billion and make sense of them. And that's really where the artificial intelligence and the computer systems help us. Those computer systems generate 259 alerts. Now, if you relied completely on technology, and some vendors make this promise that you don't need the expertise because the system is so clever it does all the work for you, that's not the case. Those systems invariably fail because they generate lots of alerts and people can't make sense of them and then just ignore them. So the 259 alerts then have to go to the people in the Security Operations Centre. They've then turned that into 59 requests back to the client for more information. So not breaches, but can you tell us more about this? Because if we can understand what we can see here better, we can tune the system. Then 5 things raised for investigation that we say this could be suspicious, probably not a breach, but we have to be cautious and go on the safe side. So we'd like some information on this today, please. And then 1 confirmed breach where we can say there is no other reasonable explanation for this behavior other than somebody is doing something malicious on your network and we need to take action now. And that number 1 is the level where we will be ringing people in the middle of the night to say we need to act now. So it gives you a nice illustration of where the technology works and where you still need the people. Okay, so some examples here. So across the business, the first example, and you'll have copies of the slides. You can read these in more depth. But the first one is where we recovered an NHS hospital who'd had no IT systems for 2 weeks. And that was having such an effect that operations were being cancelled, and they couldn't really see a way out of this. Their IT supplier wasn't helping, wasn't even getting somebody on site to help them, and we managed to recover everything by 5 o'clock on the same day, and everything was switched back on, and we managed to isolate what the real problem was and recover from it. So that's one example from an incident response basis. The next one is from a charity, and this charity was hit by ransomware, but that wasn't actually the main impact. The ransomware, with our help, was detected and recovered, but the charity also has an arm that provides services to other organisations, and these services to quite large organisations. And contractually, they had to tell these organisations that they'd had a cybersecurity breach. All these organisations then stopped using the service and required evidence and proof of how they dealt with the breach and the nature of the breach and how it had been contained before they would allow the service to be resumed. So they then had a whole area of income with approximately 100 people's jobs also depending on it that was just completely stopped. And we, in total over 4 days, dealt with more than 1,000 questions from these clients, and in 4 days managed to get every single client switched back on and reusing the service. And we see that increasingly, that when a client has a breach, certain key customers can just say, we're not going to use the service until we have an appropriate amount of information and assurance. The largest one we've been involved with to date was a single phone call that £1 billion a year of revenue was dependent upon. And at the end of 60 minutes, the client agreed to switch the service back on again. So that can have a real impact on the client. If they don't deal with the breach effectively and don't communicate effectively, then it can have a knock-on effect in terms of getting those clients using the service again. The next example is an organisation providing guarding services to embassies and convoys. And our testing showed that the tracking system that they had purchased had been sold to them as appropriate for that usage. So they bought a system specifically sold to them as for tracking high value targets and convoys in a military type situation. Actually had no security and could be intercepted, and you could see details of where the convoys were in real time, and also information about who was being taken in the convoys. And it turned out that the seller of this system had actually just taken a system for tracking taxis and then resold it and rebadged it and marketed it as if it was appropriate for a more of a military setting. So our testing uncovered that, and we were able to fix that and secure the service and make it appropriate for their usage. And then the last one is actually really what I said with the artificial intelligence. This is, you will have heard in the last couple of years of universities in the UK being hit by ransomware. And this showed the value of our 24/7 monitoring, because one of the universities you didn't hear about had our 24/7 monitoring in place. We were able to spot the attack in progress. They knew other universities had been hit in the previous month or two, so they were aware they might have to react quickly, but we spotted the first stages of an attack. We were able to work with them to deal with that and prevent it ever becoming ransomware, and so there was no impact on the university other than the effort they had to do to fix the systems as we went along. So that gives you a bit of a flavour of some of the things we do on an assurance side with testing, monitoring and incident response. And our job really is to identify the skills gap within the client, and we fill that skills gap. So as long as it's requiring cybersecurity expertise and cybersecurity services, then we're interested in that, and that it helps the client fulfill the gaps in their expertise. So I'll hand over to Gemma to pick out a few KPIs. We've established these a couple of years ago, and our investors like these as a good way of tracking performance of the business.
Yeah, so as Ian said, these are our KPIs that we monitor each year. So key ones for last year include the assurance gross margin has increased from 58% to 63%. So this is one of the reasons around this is that, as we said earlier, we've continued to do a lot of off-site working, and that allows to efficiencies in the diary. Lucy, do you want to talk a bit more around that?
So before COVID, before the pandemic, we did about 90% of our consultancy work on client sites. Obviously, when that changed to remote working, we had to change pretty quickly as well to re-engineer those services to be delivered remotely. And we did that very quickly and very well, and that's going very well, and clients do like that. But as Gemma said, one of the benefits to us for that is that the diary efficiency is greatly improved. So a lot of travel time was built in before to consultants' diaries, and now obviously they can be the diaries can be fully utilised. So in fact, in 2021, we achieved over 90% utilisation on average, which means for each of the consultants, and have about 20 consultants, they need to be their target is 16 to 17 days a month chargeable work. So that was much more easily achieved for each of them because of the diaries. And the other thing, I don't know if you're going to say that, but simultaneously in August, we've also increased our day rate of the consultants. So that has also had a positive impact on the assurance gross margin.
Yeah, and when we put our rates up in August, we tracked the proposal to sale ratio, and it actually increased rather than decreased. So I think there's scope to do more in that area in 2022. I
will say as well, though, that in terms of utilisation, that 90% average is perhaps a little bit high. So I try to keep it around 80 to 85% so that the quality remains and the consultants are happy at that level.
So our target gross margin is probably closer to 60, isn't it?
Yeah.
63 is probably gone a little bit over.
Yeah, so another key one is that our repeat revenue has gone up to 81% from 73. So we've had a real focus on the quality of clients rather than just bringing on as many new clients as possible. We have acquired new clients last year. We did 85, but it was more about building that relationship, doing a lot more cross-selling, and we can see that in the margin as it's gone up. And then finally, as Ian discussed earlier, we found that over COVID, it did have an impact on the pipeline. So that has been reflected in the gross margin for MDR, but that has now recovered.
Okay, so I noticed Sam has said in the results, he said momentum was strong in Q1. Is this the assurance business due to the perceived Russian threat? That's an interesting discussion with clients. Some clients are taking the view that certain software products that originate from Russia could be utilised in a conflict situation and therefore might present more risk. Some clients are asking questions about increased attacks from Russia. We don't see in our monitoring evidence of increased attacks on the UK from Russia. There's always been lots of attacks. Russia is always number one or number two as a source of attacks. But we don't see specifically a material increase at the moment. But I think clients are being reminded of the importance of cybersecurity and perhaps doing things earlier than they might have done. So it's maybe given them a little jolt and said, yeah, well, actually, that cybersecurity thing we've been discussing, maybe we should make it happen. So I think there's a perceived threat that is really probably more than the actual threat. Sam also asked, what is your plan to convert the business into one that generates free cash flow? How long until free cash flow might be achieved? That's really the MDR pipeline and new MDR client wins, which really stalled in COVID and is only now coming back. And that has an effect because a typical 3-year MDR contract, 25% of the fees are up front. So winning the new MDR clients tends to have a good positive cash flow effect, even though the revenue has to be split equally across the 3 years because of IRS 15. But it has a good effect on cash flow. And you, unlike the assurance division, where every day you sell, you have to buy another day of consulting time. We have to employ more consultants. All our consultants are full-time employees, but we have to buy more consultants when we sell more consultancy. In MDR, it's more scalable, in that you can add additional clients without necessarily increasing the headcount, because you have continual tuning and more automation and streamlining of processes. So that's really where the increased profitability and the free cash flow comes from, is the increase in MDR, given that, as we said, 60% is really the ideal margin for the assurance side. Okay, so the market opportunity. The UK government published a report at the start of 2020 that put a figure of 8.3 billion on the UK market. And an organisation called Plimsoll survey all the cybersecurity companies in the UK. Many of them are quite small and therefore don't publish full accounts, but they make assumptions based on things like changes to balance sheet, etc., of those privately owned companies. So they estimate the market growing at about 9%, and we've seen that historically. 9 to 10% is a typical market growth. And this has been driven in the last few years. GDPR coming into force with increased multi-million-pound fines had an impact, and more recently it's the prevalence of ransomware and the hit that organisations take when they get hit by ransomware that's really driving that. And so the investment case, great sector to be in. We've got a very experienced team. We've shown our revenues are very resilient through challenging times. And now second year of adjusted EBITDA profitability, and our diverse client base shows that we're really quite well insulated into any particular sectors having any issues. David has asked how the partner sales channel is performing. I'm not sure if we have a slide on the partners.
I think it might be.
I'm going to flick forward to see if we have. We have different versions of the slides, and we didn't use all the slides we've used with institutions. We do have some appendices, so I'm hoping that it's in here. And yes, it is. Okay, so Appendix 3, the ECSC Partner Programme. So we set out in 2019 to broaden our reach through allowing partners to earn referral fees by bringing business our way. And a typical partner will be an IT reseller or an IT managed service provider. And they're more SME focused, but not primarily SME. And we've now got 160 partners signed up. 17% were active. And that's now contributed 11% of revenue, which we had in the headline figures. So 6 of that is in assurance and 5 in managed services, but overall 11% contribution to revenue. But importantly, it's contributed to 24% of new client wins in the year. And that's an indication that when we win a client, they often start with initial smaller projects and grow in size, and many turn into managed services. So 24% is the client acquisition contribution, but that's already generated 11% in terms of revenue. So that's worked really well for us. I'm going to jump about a bit here, and if I can press the right button. So yeah, the backwards button. That's really quite key to us. That's the staff survey that the HR director runs every year. And if you take that, fundamentally our business is about we fulfill the skills gaps in the clients, and many of you will be aware in the UK we have particular skills shortages in lots of sectors, and our sector is one of those. And that works for us as long as we can recruit, develop and retain the right people. And this is an indication of how people feel like working for us. But if we can do a really good job with that, and better than our clients, then we will have the skills and expertise. They'll struggle to do that themselves. They'll therefore look to us to do short-term assurance type work or longer term outsourcing with the MDR division. So that skills shortage really works well for us as long as we do a great job in recruiting and retaining those people. So that's a key part of what we do. This appendix here, this one shows the ownership. We can't be 100% sure that the bottom 2 categories may have additional shares we're not aware of, but from the share register, we can see that management and employees own 32% of the company. The original investors who invested back in 2001, they still own 19% of the business, and then 49% is out in the market. So that gives you an indication of the high level of buy-in from the management team and the employees. And I think, other than the figures, we're not going to go through the figures in detail. So I think we will go to questions, unless you've got anything else you want to. Okay.
Ian, Lucy, Gemma, that's great. Thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's just situated in the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Ian, Lucy, Gemma, as you can see, we've received a number of questions throughout today's presentation, as well as a number that were pre-submitted ahead of today's event. I know you've addressed a number of these throughout today's presentation, and thank you very much indeed for that. Firstly, thank you to all investors for submitting their questions. And Ian, Gemma, Lucy, if I could please ask you to, where it's appropriate to do so, just read out those questions and give a response, and then I'll pick up from you at the end. Thank you.
Okay, so we've got one, a pre-submitted one about the partner program, the strategy for developing it, and specifically that is really moving from the focus of just building the number of partners. We still accept new partners, but it's very much identifying those that have brought us regular business and working with them to further develop the importance of cybersecurity in their portfolio. So we've got a really good picture now after 2 years of the which partners are the most profitable and which partners are we delivering the most impact on their clients. So we continue to do that. So it's really developing quality rather than quantity for that. I've got one here. How is the cybersecurity market evolving, and is the situation in Ukraine going to have a knock-on impact for the sector in any way? I think I probably answered that in that that people are hearing about cybersecurity issues and Russia attacking other organisations. That isn't really a change. And I said they are always number one or number two in the ranking of where cybersecurity breaches originate. But I think it's focusing people's minds a bit more of that risk. So it isn't so much that things have changed, just that the client's perception is maybe the risks have increased. Another pre-submitted one, in terms of the market, you see new products come through that are distracting clients from taking your services as they think they can do it themselves. Yes, there is always a steady stream of new products that promise the earth and have a lot of elaborate marketing, sometimes make a nice demo, sometimes they will provide a free service and a trial. So lots of ways to try and entice the IT team, fancy graphics that look pretty and look like you see in the movies. And there is always a danger that the client believes that can do the job, and is a quick route rather than really building the true expertise. The problem with those is that they tend to need the expertise to configure and manage and monitor them. And if people buy it without that expertise wrap around it, then invariably those fall into disuse and fail. And that leads to breaches. And yeah, we sometimes will pick up the client at that point, that the client has tried doing it themselves. They then have a breach. And then they realize it was actually the skills that were the important thing, or the primary thing. And then we have to work with them from there. So yes, clients do that. And my general rule and advice to clients is don't use a technology that isn't 2 years old, because you want to see not that something is new and fancy and promises the world, but something that started to get a proven reputation in the marketplace for delivering. So the brand new thing that you've been tempted with, just wait and look at things that are proven. So you'll find that cybersecurity experts tend to be quite conservative. They want to use technologies that have got a good track record, not something that just says it's fantastic. So I've got one. First, many thanks for putting on the Allenby report on your website. Very useful. I say they have referred to 2 client losses in H2 and also have reduced expectations for 2022. I would appreciate your perspective on this. My personal perspective is I prefer to see analysts being conservative and not putting a company under pressure and then reporting failure to meet results. So I'd rather Allenby be conservative and we exceed their expectations than the other way around. So I'm fine with reduced expectations there. OJ has said R&D costs have risen to 15% of revenues. Will you be releasing new improved products, or will R&D reduce over time? I think that's a good question. We are constantly looking at what technologies are available, what technologies are in the marketplace, and what's the best way to serve clients in the most cost-effective way. And is that for us to develop our own technologies or use other people's technologies? And that's always under review. So we don't see ourselves as an R&D company where our primary objective is to develop software. Our primary objective is to deliver the best service to the clients. So if the available software out there does that job, we would use that. If it requires us to make enhancements and develop our own systems, we'll do that as well. So it's not really that we have a target for that. It's just that can be useful, and we get useful additional R&D credits in terms of that helps revenue. So there's some government support for doing that, but that's not really the driver. It's whatever leads to the best solution for the client. And if a magic new product comes along that can do it better than we can, and it gets proven that it can do that over a few years, then we could say that's now our preferred platform rather than something we might have developed. So it's always under review, and we don't have a fixed ideology when it comes to that.
Shall I take this next one?
Is that Roger F?
Yes.
Sure.
So, question from Roger. Did I gather from Lucy that your goal is 16 to 17 billable days per consultant? Is that the maximum? And appreciate if you could clarify that. No, it's not the maximum. That's a target internally that we set for utilisation for each individual. And they can vary between different consultants depending on the other responsibilities that they might have. That level, I feel, is where we can maintain the quality that we set. But we have stretched capacity, so regularly consultants will go in a month will go over 100%. So they could do up to 20 days, but it's not where I want them to be, because they can become overworked and quality can slip at that point. And that's when I start looking at needing more capacity. So very much adding capacity in with the consultants. I just follow the sales patterns and what's coming. So if we're consistently over that kind of 85 to 90% utilisation, then I start adding to the team at that point.
And it's worth saying that we now have no bonuses for anybody in the company, including the PLC board. We fundamentally think bonuses don't drive the right behaviours. So unlike some consultancies, we don't reward consultants for overworking, because that tends to lead to poor quality. So there is no incentive for a consultant to work weekends and work over hours. We are aware some consultancies will bonus people as they go over target, and we see that as rewarding poor quality. So we'd rather maintain the high quality and the appropriate billable charging for that quality. I've got one from David. With the market growing at 8 to 9%, are you expanding in line? Do you anticipate accelerating revenue growth, and if so, how? Yes, we've seen a really strong recovery after COVID on assurance. As we said, assurance grew 15% last year. The thing that's held us back has been the recovery of the pipeline in MDR. We're seeing that now coming back to where it was. So that will be where the accelerated growth will come from. Sam has said, from your case studies, it appears you are sometimes generating huge value for your clients, saving them many millions. Are you paid appropriately when this happens? I think that's an interesting point. This is how I've always seen it. Yes, if somebody is in a crisis, they are the client where a single phone call reinstigated £1 billion of revenue. Their total revenue was about £5 billion a year. And their CEO told me that they thought they were 48 hours away from going bust. So we could have exploited that, and we could have charged percentage of revenue, percentage of profit. We could have really hurt them financially, and that would have paid us handsomely for that piece of work. But what that wouldn't give us is a client for life. And I'm more interested in the ongoing relationship with that client, the future work, future managed services. We tell clients not to rush into buying anything in the middle of a breach. because lots of people will try and exploit the situation. Sometimes their own IT team will try and exploit the situation by trying to push through something they've wanted to play with for a while, and on the back of the breach they can argue that they need it. And we say to the management team, no, we will be fixing things with your team, and then let's take our time to look at where the priorities are and how you can learn from the mistakes that lead to a breach. But don't rush into doing things. So yes, we could exploit the client, but then our reputation would be the people who are good at fixing it, but doesn't it cost a lot, and you hope to never use them again, rather than these are the people that helped us, charged appropriately, and then we want a relationship long term with them. So that's very much our philosophy. Another pre-selected or pre-sent in: how is the company positioned to weather the macroeconomic risks resulting from the situation in Ukraine? Well, we're not seeing the situation in Ukraine negatively affecting any revenue. We have analysed our clients who are predominantly UK based in terms of Russian ownership, and we don't think we've got any exposure. We've certainly got no connections with any company that could be affected by current sanctions. So at the moment, for where things are today, then we think we're in a good position there. The only effect we are seeing is some increased awareness and people's concerns about either attacks from Russia or using Russian originated products, but we've mentioned that.
Shall I take this bottom one?
Yeah, sure.
Another one from Roger. How many people do you have in the UK? Are they all based in the Bradford area? We have in total up to about 90 staff across the whole business. About half of those are Bradford based. There's an expectation when working in the SOC that those people will actually be in the SOC, and obviously the Australia-based SOC as well. But for salespeople and the consultants, they can be based anywhere in the country, which is great. And one of the benefits of the more flexible working and the working remotely has brought about the ability for us to recruit in a bigger pool of people. So that's definitely helped.
Okay. Rogers also asked a case study on an NHS trust where they named an MDR client of yours. Had they been an assurance client? No, that particular one, we had no previous contact with them, and it was actually a sales partner who had sold to them, and they were just looking for anybody that could help. And our partner said, well, these people have helped our other clients and brought us in, and we fixed it in a day. John has asked about the share price and why the share price has underperformed so badly when you appear to be making good progress. I agree, but would I never not agree? Yes, I mean, for us, if we take how we view the business from where we were pre-IPO and where we are now, we see steady improvements, investment, and the business getting stronger and better. So we see the improvements in the business as a straight line of improvement, and the market has at one point thought we were worth £5.50 a share, and yesterday 50 something pence a share. So there's been a times 10 variation in how the market has viewed us. And we don't focus on that. We focus on improving the business and improving profitability. So we'll keep doing that. And if the shares are cheap, then you should buy the shares. And if they're expensive, you should sell them. So that's my view of it. So Jake has asked, Jake's got the pre-submitted questions. Has the current skills shortage impacting the business and its recruitment activity? I think there was more impact last year. There was particular pressure on certain roles and salaries. Our overall salary inflation for 2021 was 7%. So it's significant compared with the last couple of decades, but it's not huge. We put our prices up by more than our salary inflation. So we think we're managing that well. But you're quite bullish about recruitment at the moment. You've got somebody come back who left last year as well, haven't you?
Yeah, absolutely. Yeah. And we tend to recruit at different levels. So, if we're finding it difficult to recruit the right skills, then we have quite a strong training program internally, so we can bring more junior, inexperienced people in and train them up ourselves. And we found that that's worked really well over the last few years. But yeah, we have had to change our recruitment strategy a bit. But at the moment, it's doing very well. We're very successful in that area, no problems.
John said, Ian, good answer. I like John. John says, I already own 220,000 and bought shares yesterday. Good decision, John. Our sales director bought shares yesterday as well. Sam has asked, what factors made you decide to take the 1 million loan rather than raise equity?
Share price.
Share price, yeah. It's the only factor. We would, that's it, the share price. Jake, another pre-submitted question. How is the company managing current inflationary pressures? How have the rising inflation rates affected the business and the services it provide? So I think we've sort of addressed that in that we did an increase over and above wage inflation in the summer. Our proposal to sales ratio increased having done that. So we should be in a position to do that again in 2022. We're very much looking at an individual basis. We don't pay bonuses and we no longer pay commissions. None of our salespeople are on commissions. So we pay everybody the market rate. Our aim is to pay everybody in the top 20% for their role in the marketplace and then be the best company when it comes to development and career development, enhancement, training, and the employees know that and they appreciate that.
And our retention figures important there. So our staff retention last year was over 85%, so that remained very high.
Yeah, so we think it's really, if you just step back and say we have to supply the skills that the clients can't recruit and retain, therefore our recruitment, retention and development is the number one thing that we need to work on. And if we can do that better, if we can be a better place to work than our clients from a cybersecurity perspective, then we'll have the skills. They won't have those skills and they will look to us to help them. So I think that's the final question, Jay.
Ian, Lucy, Gemma, thank you very much indeed for being so generous with your time and addressing all of those questions that you can from investors this morning. And of course, ladies and gentlemen, the company will have the opportunity to review any further questions submitted today, and we'll publish those responses where it's appropriate to do so on the Investor Meet Company platform. Ian, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please ask you for a few closing comments to wrap up with, that'd be great. Thank you.
Yeah, I'd like to thank everybody for listening today, and particularly people like John who've invested in us. And I think we've got a great team here. We're making lots of improvements. We've learned lots of lessons as a result of COVID, and look forward to presenting our progress in due course. Thank you very much.
Ian, that's great. Thank you very much indeed. Ian, Gemma, Lucy, thank you very much for taking the time to update investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of ECSC Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.